Welcome back. The sell-off continues on Dalal Street. Sensex and Nifty declined for the 8th straight session, marking the longest losing streak in 2 years. Nifty has dropped below 23,000 mark. Sensex down below the 76,000 level. All sectoral indices ended in the red this week. 26 lakh crore rupees in investor wealth has been wiped out in the last 5 sessions. The sell-off has been particularly brutal for mid-caps and small caps. Nimesh Shah is here with more on the market correction. Nimesh, what's the road ahead?
Well, as you rightly pointed out, there's a brutal sell-off in the broader market stocks. The small mid-cap index is down 7% this week, small-cap index down 9%, and the micro-cap index is down almost 10% this week. So that's the kind of fall we've seen in this week itself. But having said that, from the 52-week highs, look at the kind of carnage we've seen in the broader market names. The mid-cap index is down 17%, small-cap index is down 20%. Micro-cap index is down 20%, and the Nifty Next 50 is down 22%. That's the index fall. So you can imagine the kind of damage you've seen in the individual stocks as well. Even in terms of the margin funding book, that's the sense you get as far as the margin funding is concerned. It's come to 78,000 crores on Feb 7th as well as on Feb 11th. Actually, from the highs of 90,000 crores, it has fallen now to 78,000 crores. So that's the kind of the sentiment is clearly broken now as far as the individual retail investors is concerned. But the big question is the market ignoring some of the positives which have emerged in the last few days? The first being the budget, which was quite positive in terms of rural demand. Now, after that, we saw the first rate cut from the RBI, and even the RBI commentary was quite pro-growth. Additionally, the cutting down the LCR implementations would mean that there is further liquidity into the system. So that was one big positive. The other big concern was the new income tax bill. Thankfully, there was no negative news in that as well. The third was the earnings season. Thankfully, even the earnings season in Q3 was broadly in line and no major negative surprises there. So that's positive. Fourth was the retail participation. Was that got hammered because of the fall? The answer is no. The January data suggests that the SIP flows were still very strong. And the last is the high frequency data. Even that is turning to the positive in the last couple of months. So clearly some of the positives have emerged in the last few weeks. Having said that, even the health of the India Inc. seems to be quite robust and strong. I just looked at the data, and that shows that 50% of the large cap companies are net cash. So that's the kind of data there as well. Now, finally, some opinions which have come this week from some large players. Rhythm Desai of Morgan Stanley believes that the underperformance of India could reverse in the coming months, and he prefers private banks, discretionary consumption, as well as select industrials. So that's the view from Rhythm Desai. Secondly, Nimesh Shah of BofA Securities. This is important. The Nifty earnings on Q3 was 7%, which is good. The broader market earnings were also good at 11%. And he believes that the downgrades since January are very, very marginal at the margin. So that's positive as well. However, Chris Wood of Jefferies today put out a note, and he's cut the India weight in the Asia ex-Japan portfolio by 1%, adding 3% to China. So he's kind of a bit cautious on India. Lastly, Venugopal Garg of Bernstein. They have been cautious on the small and mid cap for the last few months now. Now he believes that there could be an overall recovery in second half, but still there is no reason to bet or do bottom fishing in the small and mid cap. So that's the opinion from Venugopal. But broadly, while there's been a brutal sell-off, there are some positive indicators which seems to be turning around, which could be positive going forward for the markets.
All right. Thank you, Nimesh, for that. Moving on to the money